If we take a look at platinum, platinum's much the same as gold and silver in a way. They're just trading sideways after having this pullback, looking primed and ready for a pop. If we take a look at palladium, it's pretty much the same thing. It's built a little bit of a base, kind of stuck right under short-term resistance, but with the bull flag. Again, this whole space is ready to pop and rally at any point here. If we take a look over at Bitcoin relatively flat. It has this kind of bearish pattern right here that doesn't look the greatest. We've talked about this for the last couple weeks, really. It's in this phase, I think, right? It's either right here or it's over here. Either way, it's not a very good sign. This could very easily the S&P 500 positive, the Dow flat, so not a whole lot of movement. If we look at the 30-minute chart over the past few sessions, really the market has traded sideways on the S&P 500. It had a little bit of a gap up and a little bit of a fade back down into support and a little bit of a squeeze into the closing bell. We saw a little bit of a pop. Definitely some money moved in and bought down near a short-term support level. And an interesting chart, which I showed last night, was the Nvidia chart. If you look at the 10-minute chart of Nvidia, you can see there was some big accumulation yesterday, big bouts of somebody loading up with some pretty massive shares. Kept popping the price up. There's natural selling bias yesterday, so it get driven up with a big order, and then it looks like there's just kind of people selling and fading price down, but just repeated purchase orders going on in Nvidia, which I find is interesting. That's we'll see how this plays out and what that means going forward. If we take a look at the rest of the market, let's look at the bond market. It's up about 0.2%. Looks like it's broken down, or it has broken down, and now it's really struggling. The 150-day, the green line here, is just really trading flat. There's not a whole lot of insight on bonds. If we zoom out, obviously it's been in a downtrend for a long time. Still trying to build a base here to see if it's going to start to go higher.
While the broad market drifted, Nvidia displayed a far more intriguing story. On short interval charts, large and repeated buy orders pushed the price higher throughout the session, even as natural selling pressure attempted to drag it down. This pattern, a heavy accumulation masked by intraday pullbacks, suggests that a major institutional player may be quietly building a position. Nvidia has been the backbone of the 2024-2025 AI boom, and its unusual order flow hints that investors expect further strength. Whether this activity foreshadows another leg up or a strategically timed repositioning remains unclear, but the behavior stands out dramatically against market noise.
If we take a look where money is flowing today, so it's more so flowing into bonds. We're also seeing the dollar up a little bit, up 0.1%. If we zoom in here, it's trying to get some traction. It's had a little bit of a bout of selling and pullback after it's kind of got up into this resistance zone as it's trying to carve out a base as well. And we're seeing gold and silver trade slightly higher this morning. Gold's up about 0.2%. Again, just kind of building up this bull flag, just drifting sideways on light volume, which is still seen as very bullish price action, pointing to higher pricing. If we take a look over at silver, we've got up 1.1%, again, holding up in this tight bull flag pattern. This could be a high momentum move, meaning we could see this pop to about 68, and it could do that in 3 to 5 days. It could happen very, very quickly. In this pattern, you can see in 3 days it did most of that move. In 3 days, it could easily do most of that move again. It took about 5-6 days in total from the low to the high, and now it's in this pause phase.
In the broader macro space, U.S. Treasury bonds attempted a modest rally, though long-term momentum remains weak after years of decline. The dollar inched slightly higher, stabilizing after its recent pullback from resistance. Meanwhile, gold and silver continued to form constructive consolidation patterns, classic bull flags on light volume. These structures often precede strong breakouts, especially when supported by global uncertainty. Silver's setup is particularly notable, with technical indicators suggesting the potential for a fast surge toward the upper 60s. Platinum and palladium share similar bullish structures, reflecting renewed interest in metals as alternative stores of value.
If we take a look at platinum, platinum's much the same as gold and silver in a way. They're just trading sideways after having this pullback, looking primed and ready for a pop. If we take a look at palladium, it's pretty much the same thing. It's built a little bit of a base, kind of stuck right under short-term resistance, but with the bull flag. Again, this whole space is ready to pop and rally at any point here. If we take a look over at Bitcoin relatively flat. It has this kind of bearish pattern right here that doesn't look the greatest. We've talked about this for the last couple weeks, really. It's in this phase, I think, right? It's either right here or it's over here. Either way, it's not a very good sign. This could very easily break down, make some lower lows like over here, and then even go potentially even lower again after that. But this is a lot of noise. If the stock market starts to rally, we could see this push higher and move up. But overall, the trend is clearly down. This is nothing more than a bounce and a pause, a bearish formation, because it is in a downtrend. It really needs to build base through here. It needs to start to come up the other side and show signs of strength before we can identify if it's in an uptrend or not. So overall, this is just bottom picking. This is a very dangerous point for Bitcoin. If it breaks down and the market wants to go lower, we're going to be back down into the $60,000 mark. But we got to let this figure out what it's going to do. If it's going to find some traction and move up into the end of the year, potentially with the stock market, or is it going to flounder and eventually break down? That's, again, it's a real mixed bag on what to do at that, which the key here is just to avoid it at this point.
Bitcoin has entered a precarious phase, struggling to establish a foundation after months of downward pressure. Its current structure mirrors earlier bearish continuation patterns where brief rallies mask underlying weakness. Without clear signs of accumulation, the risk of another leg lower remains elevated, potentially revisiting the mid-$60,000 zone. Seasonal trends could offer short-term relief if equity markets strengthen, but crypto remains vulnerable to macro sentiment. Traders face a classic dilemma: participate early and risk deeper drawdowns, or wait for confirmation and potentially miss the initial rebound. Until Bitcoin proves strength above resistance, caution remains the smarter approach.
If we take a look at natural gas, it has taken quite a haircut in the past few sessions, really gone out of blow-off phase. Big reversal down about 6 or 7% yesterday, down another 3% again today. So definitely seeing this space lose some of its shine. Oil is down about 0.25%, nothing too significant, but it did have a pretty good pullback yesterday back into a short-term kind of support level. If we look at the 30-minute chart, you can see we're kind of right down in this level where price either gets here and gets sold off, or it dips down and gets bought back up. So it's kind of in the short-term support zone to see how that is going to play out. Now, last night I mentioned how money was flowing into the large techs a little bit. We saw technology, XLK, that tech sector did pretty much all the heavy lifting yesterday. It continued to move higher while pretty much most other sectors were down. So money was flowing into the big mega techs. We also saw the IWC, which are the micro caps. They continued to push and move higher. So money's moving into the big mega tech and also the micro caps, the tiny little companies. People are swinging both ways. For the tiny, fast-moving companies, very lucrative, very kind of growth-oriented. And then the big tech is kind of the big, boring play, the kind of mass psychology, everybody ride the tech in the AI space.
In the commodity sector, natural gas experienced a sharp reversal following a speculative spike, shedding nearly 10% in just 2 sessions. Such blow-off patterns often signal exhaustion and can trigger accelerated declines as momentum traders exit. Crude oil pulled back as well, retreating into short-term support where buyers and sellers often battle for control. This zone will determine whether energy stabilizes or extends its recent weakness. Overall, the commodity space shows mixed signals. Precious metals appear poised, industrial metals remain neutral, and energy markets are recalibrating after weeks of volatility.
Now, it's interesting here if we take a look at XLU. XLU, the utility space, has completely fallen out of bed. We talked about this yesterday morning, I think, before the open, how it was underperforming. Money is flowing away from boring old utilities and it's going somewhere. And it seems to be kind of moving into the tech and to the small and micro cap space. So people are moving to risk on. Potentially this is the holiday kind of rally, the last push into the end of the year. Seasonality wise, this is when the stock market should start to come to life. So people seem to be definitely getting away from the utility space. And it is coming down to the 150-day moving average. I wouldn't be surprised if it starts to find a bottom in here. It's looking oversold. It's down kind of at a support level if we were to just throw a little kind of box into this range right here. it's definitely coming into a bunch of peaks, consolidations, and where it's digested this move. So overall, it's just interesting. This is more of a sentiment play. This just tells us people don't want big, boring companies. They want tiny micro cap stocks if they're going to get involved in the market. And another way to look at this is the dividend space. If you look at dividend stocks, they were down quite a bit yesterday as well. People are just not interested in that play at the moment. They want either more so precious metals or they want smaller micro cap stocks.
One of the most telling dynamics of the session was the migration of capital out of defensive sectors and into high beta opportunities. Mega cap tech led the charge, supported by strength in micro cap stocks, an unusual combination that typically signals speculative appetite. Utilities and dividend-paying equities, traditionally safe harbors, sold off sharply as traders sought higher growth potential. Seasonality also plays a role. Late-year markets often experience a risk-on bias as fund managers chase performance and position for holiday rallies. Together, these moves paint a picture of investors shifting away from stability and towards sectors offering greater upside, albeit with higher risk.